Hey traders, Raghee here. Let's get a quick audio and video check in. Should be good to go. All right, welcome. Talking to the folks on our Simpler Trading YouTube channel, our Simpler Trading Facebook, and of course, those of you in the free trading room, good to see you all. All right, let's get to work, shall we? So we've got a topic that might seem a little cryptic. It's probably new lingo for a lot of folks. We're gonna show you what it means. We're gonna show you how to use it. We're gonna get into the nitty-gritty of one of the four factors of trading. So, of course, if you have a symbol that you want to take a look at, let me know and we can pull it up. And the idea here is really simple. There are four factors to trading, and I'm going to grab a notepad here real quick, and let's see if we can't do this. All right, good old notepad. When all else fails, there's notes. All right, so let's do this. Okay. And by the way, as I'm explaining all this, I do want everyone to know we have a webinar coming up. We'll talk about that. All right, so the idea here is there are four factors to trading. And if you've never heard that before, no problem. It's really simple. The first one is price. And most people start and end there. What does that mean? Open, high, low, close, most indicators, moving averages, right? That's price. Fibonacci retracements, that's price, right? And that's great. We need price, obviously. After price, we have volume. And in the order in which I learned about these four factors, this is the order in which I learned about them. I got into volume. And not just any volume, but specifically price-based volume. How many shares, how many contracts traded at a certain price, right? The next thing I ran into is time. I started to really observe time of day, the date, different events like hot zones, and even the time of year. How does all that affect us? We know that options expiration is going to carry with it a certain amount of volatility. We know that end of month, end of quarter, end of year, different events like earnings season, those are going to affect our trades because they affect, well, the last factor, which is volatility. And it kind of makes sense why, when I look back on in this and share this with you all, that I sort of discovered everything in this order. One thing led to the other, right? Getting curious about volume got me curious about time or date based volume and then price based volume. And most people don't use price based volume. By the way, what's price based volume? VWAP. Some of you are familiar with the V score, um, as well as, say, V profile, right? Things like that. Price based volume. And then finally, volatility. And that's why we're here today. Some of you might already be familiar with the HPMRs, which is the hourly price movement range. Okay. And then we also have the DPMR, which is the daily price movement range. You might say, Rob, I've never heard of those before. Well, until I created them, neither had I. So let's jump into this very last one here, which is daily price movement range. Okay. And by the way, this is exactly what I'm going to dive into on the 23rd, next Thursday at 8 p.m. Eastern. You can register at simplertrading.com/auto. All right, let's do this. Charts. The idea with what we have in terms of volatility is, well, how do we measure it? We can talk about something being volatile, but it's always a relative conversation. It's always a comparison, isn't it? Meaning that volatile compared to what? What came before it, what comes after. So let's just take a look at the ES. I'm going to show you the S&P three different ways. First is the mini S&P futures. I love this contract. I've been trading it since about 1999, 2000. And it was the first electronic mini access to the S&P. Amazing contract. And what we have here is the ability to obviously trade the S&P 500 through a nicely levered futures contract. Volatility is going to be something that I'll measure on the S&P for nearly a 24-hour period. This is almost a 24-hour market. It closes for an hour a day. It trades through the Asian session, European, UK, US, obviously, and then it closes for settlement, as many markets do. But having only closed for 1 hour a day, I've got 23 great hours to study this. And so whether that be an intraday hourly price movement range, right, which I think a lot of you might already be familiar with. I look at the volatility broken down hour to hour. We also have the daily price movement range, which is volatility broken down day to day, session to session, however you want to look at it. By looking at these zones, well, what are these zones actually telling me? They're telling me where support is. They're telling me where resistance is. And notice it updates every day. It kind of snakes along the chart. Why is that? Because volatility has to be calculated from where we are right now to where we could go, right? These are projected levels based on a pattern of volatility. What are the highs? What are the lows? And when we touch one of these levels, we hit one of these levels, we can possibly make a decision to enter or exit. That's really it. All right. So let's talk about another way to look at the S&P. I'm going to pull up the SPY. Now this is the ETF of the S&P. A lot of traders prefer the SPY or the options on the SPY because not everybody trades futures, super leveraged, a little bit more difficult to manage risk within. And a lot of folks love the zero dated expiration. So we have expiration every single day in the SPY options. So it affords a really nice daily expiration, low cost way to sometimes day trade, obviously the SPY. You don't have to day trade them only, but it's a really cool way to look at the market. When we say something's really volatile, it should be because we had a candle like this one. What that means is this particular candle is showing us what? This particular candle right here is showing us what? We hit resistance and we hit support in the same session. It's a daily time frame. Did another one of those right here. Right now, are things volatile? Not really. They're actually stuck in a range. Would I know that if I did not have these indicators on the chart? That's probably a big part of it. Just let's take a look at this without it, just for a moment. Where's the context for this being resistance and this being support? Where's the context for this being resistance and this being support? Or the context for just being stuck in a range, not touching either one of those levels, right? I didn't know either until I started calculating these levels, right? So that's the SPY. Now, the question I get a lot of is, what about the SPX, Rog? Can we do this with the S&P SPX? Absolutely, right? So the most common way I find, and let's make this chart a little bit bigger because a lot of people ask me about this particular time frame. We'll start off with the daily, and then I'll take you to the hourly chart, all right? So here is the SPX, and a lot of folks ask, Rog, what about selling premium? That's very popular with the SPX. So let me ask you, if you knew that after a run up into this area right here, we rally up into that area, if you knew there was a higher probability of exhaustion in this area, what's your edge here? Sell calls. So when people ask, Rod, can I sell calls? We enter this zone on the SPX. My answer is that would be part of the setup. Maybe not what we would do, but that would be part of the setup with the expectation that once we reach this resistance area, we move lower. All right. Well, then the flip is true. Okay, Rog, what if we enter the lower end of the range? Can I sell premium for puts? Now, why would I want to sell premium for puts after a move lower? Because that's what I can collect the most on. I'm focused on the puts because I don't expect prices to go much lower. And while they did go a little bit lower, what do? They started moving back up again. Okay, so this is the way that I look at it. By the way, could you have sold calls here again? Yeah. All right, so I'm just showing you in a daily time frame. That may not appeal to a lot of folks, that particular type of trading on a daily, but let me show you those same levels on the hourly. This probably gives us a little bit more of a granular understanding of these zones. Again, daily price movement ranges. Each one of these is good. Each one of these rectangles, these zones, is good for a sessions. We update these every single day for the most accuracy. This isn't something that lingers out there for weeks or months. Every day it's new. And that gives us much more accurate levels. Resistance, support, and getting really close to resistance. And this is just the last Tuesday to today. So it's basically the last 10 days or so of what we saw on this SPX. And I got a lot of questions about the SPX. So a lot of folks like to trade this. Now I'm on a 1 hour chart. A lot of times folks ask me, Rod, can we do this on a 30? Sure, absolutely. You sure could. I prefer 1 hour because the idea of the 1 hour, and this is really big, gang. The idea of the 1 hour is, can we start taking trades overnight? Are there setups where rather than having to day trade, which I love to do, I love to day trade. However, sometimes the day trading follow through is pretty limited because we're only looking at follow through from somewhere between 9:30 and 4 p.m. Eastern. If I were to look at Nike in that way, cool. If I bought down in here, right? Conceivably, I could exit it in here. But by buying in this area, knowing that I'm going to take this overnight, instead, we're able to take a more significant ride to the upside. And frankly, it's not done yet. We could take more. Now, this is an actual setup from our Sector Secrets Mastery. This is something we've actually done. This is not a hypothetical. This is actually something we set up. So this is Nike. You might say, okay, Rod, does it look the same on the 1 hour? This is what's really cool. The 1 hour time frame has the same zones as the daily. So what we're doing is we're taking the daily volatility zones and we can put them on an intraday chart. So for those who like to say, Rog, I know the daily time frame has a lot of psychological relevance. Things that happen on the daily just happen to usually be a little bit more impactful than things that might happen on, say, a 30-minute time frame, right? But what if I could take those daily zones and just overlay them on a 4 hour chart, a 1 hour chart, a 2 hour chart, a 30-minute chart, whatever you want? Yeah, we absolutely can do that. And that's what this has done, right? Same idea. All right, let's take a look at something else. What about Citigroup? I like the way financials look right now. I'm super excited, right? So let's talk about what this would look like. And this is another feature of the way I trade. So let's move away from the daily price movement ranges for just a moment and talk about probably the most important thing that comes before any indicator, and that's structure. And I would be absolutely remiss if I did not talk about structure because everything relies on structure. What's structure? It's just a fancy way of saying, maybe not so fancy. It's a fancy way of saying, what's the trend in the market specific to the interval, specific to the time frame? What's the trend on the daily? What's the trend on the 1 hour? What's the trend on the 5-minute? And I know a lot of folks like moving averages, 20, 50, 200s. I used to look at those too 30 years ago until I realized they're really slow. They're really slow. Are they useful? No doubt. But to wait for a 20 period to cross the 50, to cross the 200, right? It's super slow. 20 periods, 50 periods, 200 periods. I want something much snappier. I want something much clearer than watching a bunch of lines crisscross each other. That's this thing down at the bottom. So I don't care what the indicator is. Structure dictates strategy. Absolutely the first step. So we build our trades from the bottom up. Step one is always, what's the structure? Well, if I've got a green trend, which is what you can see here, I got a green trend, I'm going to be looking to buy. And you can see right here, that's exactly what we did. So before we even get to volatility, before we even get to volume or, whatever you might use, I like price patterns a lot, right? That's a big part of what I do, price patterns. Before we even get to that, we have to ask ourselves, what am I allowed to do? Buy, this is so important, gang, or sell. If you're ever looking at a chart and there's no clear way to say you should be a buyer or a short seller, right? Please don't trade that chart. There's no edge there. Edge comes with the clarity of knowing you want to be a buyer or a seller, right? So before all of this stuff, whether that be, I love using a slow stochastic. I love my V score. I love the DPMRs and HPMRs, but those indicators, and this is any indicator, gang, mine or anybody's, and I just can only talk about mine, right? But any indicator you have, you are going to absolutely dramatically improve the accuracy of what you're doing and when you're doing it and the direction that you're expecting by starting with structure. There is not a single approach that does not benefit from a very clear cut view of what's most possible for follow through. So Citigroup's a really easy example of a good old fashioned I need to buy and I'll take advantage of a mean reversion. This, by the way, was also one of my favorite price patterns. So what I'm showing you here is kind of layering a few tools, right? Structure, volatility, and then this is a minor low. This pattern here, that pattern is just money. I just call it a money low. It's just money. What is it? What is it? It's a way to understand when after a pullback, when after some weakness, the buying momentum is coming back, right? So we layer all these things. We just one on top of the other. Let's talk about another setup. Popular stock, right? Amazon. Let's start at the bottom of the chart. Structure. If this is mostly green, what do I know I'm going to be? Really simple. Buyer, not a buyer or a seller. I want to be a buyer. By the way, my traders out there who like to sell premium, if I want to be a buyer, what can you do? It's also a pretty good time to think about selling puts because I want to be a buyer at support. I also want to sell puts at support. That's very, very effective timing for that kind of approach. All right. So structure. Let's go back to our DPMRs. All right. Amazon. At this point, and this is what I love about automated tools, gang. All right. That's what I love about automated tools. The idea here is that if the zones are already there, and I already know what I want to do, okay? The zones are already there, and I don't already know what I want to do, I'm in trouble. But what do I have? I want to be a buyer, and here's support. Okay? That's the whole idea. So let's do the same thing again. Let's take this thing off the chart. Darvis is nice. Definitely helps, right? That's where a lot of the indicators that I use complement each other, right? We want tools that complement each other. Boom. Support, right? Here's another layer of support. So I've got two opportunities. Green. If it's mostly green, what do I know? Do I want to short this? Not unless I hate my money. Green, green, bye-bye. And then this, gang, this happened Wednesday. Taking the trade overnight does what? Taking the trade overnight gives us a lot more opportunity to the upside. We're long from the 11th, by the way. Taking the trade overnight gives us a lot more potential upside. So this is where I'm not day trading as much, gang, or I'm limiting my day trading to the first hour of the day. And then I'm spending the latter part of the day asking myself, where are setups like this where I can take a short-term, overnight swing? Not day trading, short-term, overnight swing. Okay? So now that you got a pretty good idea, we've been talking for about 19, 20 minutes here. Now that you got a pretty good idea of what we're doing and how we're doing it, I don't pull these symbols on these DPMRs on all symbols, right? I've got a very curated list of the symbols that I do pull these on. But now that you get a pretty good idea of what this is, I wanted to leave you all with some good ideas about, all right, this is why this is working. 1 hour time frames, short term, overnight, finding trends. Again, that's going to be the foundation for any successful approach, right? So what symbols are on your mind? Let's see if we can't pull up a few. I don't use meme stocks. I don't do illiquid names. But yeah, give me some symbols now. Now that you know what I'm looking at, let's look at some examples. Yeah. Microsoft, Supa, you got it. Let's take a look at Microsoft. So let's start at the bottom of the chart. Structure on the 1 hour up. Structure on the daily, it's been up for a while. So by the way, it's buy only. Now, some of you might say, okay, Rag, I get it. We could have gotten long Wednesday. Yeah, absolutely. But let's open up the daily time frame because that's a little bit trickier. It's a little bit trickier. Take a look here. So the gray areas are support. The yellow area is resistance. There's nothing I need to do. There's nothing I need to calculate. There's no settings to change. It's completely automated. Every time, especially since basically the beginning of February, every time we have a dip to the gray, that's the support. We look to see if there's a valid buy. Now, every one of these dips is not going to be a buy. What don't we have right now? No trades here. Last 3 days, nothing. Nothing. Got it? So this is the 16th, 15th, and 14th. The last level we hit, that high right there. That's resistance, that's support. Okay. Let's dial that in a little bit because I do want to take a look at the 12th and 13th. That's when we launched, or 10th and 13th. That's where we jumped higher. So let's talk about the actually, am I looking at the right days? Here. Yeah. February 10 and February 13. All right. Let's dive in a little bit more on that, shall we, Supa? All right. That's the 13th, right? What's the last thing we hit? Remember, the zones here are the zones I just took from the daily, right? These are not different zones. These are just daily zones overlaid on the 1 hour. So daily zones overlaid on the 1 hour. What's the last level we hit? Resistance. The last opportunity we had based on the DPMRs was a short sell. I mean, they are what they are. There's no secret squiggles to see crossing, nothing. Neutral market, resistance. Now, if this was green, no go, right? No go on the 1 hour if this was green. So this really wasn't a daily time frame setup. This would be a 1 hour time frame, all right? Market structure dictates strategy. Next up is Exxon. All right. At this point, I think y'all don't even really need me to tell you. Now, I will say this one's a little disappointing because, yeah, we hit the resistance, but I was in a trend, right? So the 1 hour time frame would be a no. Y'all see that? It would have been a nice buy. And actually, the bot got this buy for us in the mastery. Bot, I'm going to brag on you for a second. Bot set this up, and we had this in the Sector Secrets mastery. But I can't short based on the structure of the 1 hour, right? If I have a neutral environment, on the daily, am I allowed to short? I am. That's the last time we hit either one. We started the day off here, ended the day there. That's what's happened on Exxon since. All right, so you just saw that on the candle for the 10th. I couldn't short it on the 1 hour. Neutral environment on the daily, I am allowed to consider an overbought short. That's Exxon. I don't believe we have BMY. I can't remember. We have about 80 plus symbols. I don't know that we have BMY on this, but we're adding more symbols to the DPMR, SJ. So I don't have that. We have almost 90 symbols right now in this. So Google, T-Bird. All right, so there's Google. So Google's really not touching either edge a whole heck of a lot. We can't be open to shorts until the 10th or 11th. And as a general rule, neutral environment, this is actually an oversold stochastic. So this one would be buy only. There's a sequence to all this, gang. So the zones are automated, right? So once you have the automatic zones, Then you just go through the sequence of, what's the structure? What's the stochastic telling me? Am I at support? Am I at resistance? And then so this results in a buy only. All right. So I need to get down to the gray area, and it would ideally be a buy. Not there yet though. Not there yet. Uh UNG, natural gas. Natty, nothing. Nothing on Natty yet. And by the way, I would be really careful with Natty. It's starting to move into the seasonal. So Uni, I would say check out Countdown Trader. I did a big write up on natural gas, and we're just now starting to build a very seasonal setup on Natty in the Sector Secrets Mastery, but it's not there technically yet. So I love Natty, but not quite there yet. All right, next up is Apple, which really nearly single-handedly took the overall markets higher. Today it just decided to launch higher. And so let's go back to the 3rd and the 7th. All right, let's go back to the 3rd and the 7th of this month. Here's the 7th. First thing we hit was that, right? Second thing we hit was that. So the last thing we did was resistance. Okay? Last thing we did was resistance. And then since that, really, really not much since the resistance. And that's the 1-hour chart. On the daily chart, it's a buy only, gang. On the daily, it's a buy only. That's it. How do we know that? Ever since the 7th, pretty much this candle right here, the only thing that I'm allowed to do is be a buyer. Depending upon the time you want to be able to hold a position, short-term swing versus maybe medium to long-term swing, the time frame is going to be what is going to dictate what you do, right? What you do. Yeah? All right. So let's take a look at some more stock or ETF symbols. What else do y'all have? So we took a look at Apple. While we're taking a look at Apple, what about XLK? XLK is the number one weighted sector in the S&P and the NASDAQ, and Apple is the number one weighted stock in XLK. So this is very much related to Dr. Bob's question about Apple, right? And ultimately what we have on something like XLK, I need to be a buyer, gang. Look how long XLK has been in green mode. And I think one of the things, gang, that regardless of what you end up doing in terms of your preference for indicators, this is called the multi-trend, by the way. The multi-trend tells me buy only. That's how clear this is. So that means I'm not going to short. These could be targets, but I can't be a short seller. Buy, 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 right? That's it. I can only be a buyer. And number one, that helps offset potential over trading. I think a lot of times traders who find themselves getting in and getting out, getting in and getting out, you're going to know now there's a path of least resistance. And then if you know you want to be a buyer only, the levels are automated. You know what you're waiting for. And yes, you can place a price-based alert for your platform to tell you, hey, we're in the zone now, right? That's where it gets really cool and easy. Wes says, looks like the DPMRs will really help with strikes for selling iron condors on symbols and chop. Yeah, Wes, I think bot does a little bit of that. I don't do spreads personally, but kind of like we talked about earlier regarding where you would want to be a seller of premium, right? Sure, especially if you're going to take that intraday and the SPX, things like that. Yeah, absolutely. I think it's going to give traders who are looking to sell premium an edge. Yeah, I completely believe that. So, if we go back, this is the SPY. I'm not going to be selling premium on puts. Sorry, I'm not going to be selling premium on puts here. I'm going to be selling premium on calls. After the run up, I'm going to be able to collect more. One of the challenges a lot of traders have is when they're selling options, part of it is Can I collect as much as I possibly can? That's where this gives you an insight into momentum, reaching, resistance. That's a tremendous edge. What about here? Momentum, reaching, support. So if one of the challenges for your option selling is, Rock, I'm really having a hard time collecting enough premium to justify the trade. Probably because you're not able to take advantage of momentum into a zone of support or resistance. So this is where, again, and I'm going to show you all something here. So I'm sure some people are wondering. I saw the question come in. Is this an hourly price movement range on a daily time frame? Not even close. No, not at all. And let me tell you why. Because I know people are going to ask, and I guess it makes sense. Rog, this looks like something that we're familiar with on your charts. Yeah, sure. They look a lot alike. These here on the right are hourly price movement ranges. Right? The process that I created is based on time, right? And DPMRs in many ways are based on time as well. Here's the big difference. And here's a really good way to explain it. Is a 20 period exponential moving average the same as a 200 period exponential moving average? Does anyone here think they're going to plot the same? Are they looking at the same amount of data? Are they going to be in the same place on the chart? No. I think so. When we say ROG, is a 20 period like a 200? No, they're both exponential moving averages, but they're plotting completely different levels, right? So the concept, absolutely. If it ain't broken, right? If it ain't broken. So these are 1 hour based volatility zones. These are daily, one entire session based volatility zones. So they're not going to plot anywhere near each other. They're looking at a different curation of data. They're broken up completely different. This is broken up hour of the day. This is broken up day of the week, right? We're not even getting specific. We're not only getting specific to a single session. We're separating out Monday from Tuesday, from Wednesday, from Thursday, from Friday, because the nature of each one of these days of the week is different. So not only is this daily, it's specific to the day of the week. So that's the difference. The logic, very similar. The data and where they plot, they might as well be two different indicators. All right. That's a great place to wrap up. Thank you for the questions, everybody. Hope this gives you an idea of what I'm doing going into 2023, not just the time frames that we're focused on, but also the way in which I'm adjusting my trading from last year to this year. Last year was a lot of day trading, and it worked great. By the way, these work on TradingView as well. Super stoked about that. So this is TOS and TradingView. If this is the least bit compelling, if you're thinking, Rog, yeah, I'd like a volatility edge on my trading, cool. If you're interested in how the multi-trend helps me build that directional confidence, check it out. 23rd, 8 p.m. Eastern, simplertrading.com/auto. Jane, yeah, total sneak peek. But the folks in the futures room and in the mastery, y'all are getting an idea of what we're already doing with this. This is something that I've been doing for 10 years. We've automated it and we've tested what I'm going to be showing you on next Thursday, for the last 10 and a half months. So 10 years of market testing and the indicator and the data we've been testing and the strategy, making sure it's really going to be what we need to take us through 2023. Yeah, we've been trying to break it for 10 and a half months. Okay. All right, gang. I will see you all. I'll see you all in one of the rooms or charts and coffee in the morning. I'll see you all at the webinar next Thursday, simplertrading.com/auto.